If you want to invest in real estate through your retirement account, isn't the easiest way to do that just to buy into a publicly traded REIT, a real estate investment trust, rather than buying physical real estate? That question comes to me from Mark, an ophthalmologist in Atlanta, Georgia. Mark and SDI Nation, you'll get the answer to that question right now. I'm Brian Ellis. This is episode number 211. Hello, SDI Nation. Welcome to the podcast of record for savvy, self-directed investors like you, where each day we guide you to find, understand, and profit from exceptional investment opportunities. Hey, be sure to stop by sdiradio.com/211. That's the page for today's episode number 211, where you'll find all of the links and resources I mentioned on today's show, or just text the word SDI Radio to 33444 and we'll send you all the info you need. It's a beautiful day in America, my friends. The real estate portfolio of the Ellis household expands by 3 more properties today, each of which is a single-family property that's fully renovated, rented, managed, and producing exceptional cash flow. Well, technically, it's not the Ellis household because we don't buy valuable assets in our own names, nor should you, but you get the point. Folks, I feel like the luckiest man alive to have the chance to do deals like the one that we're closing today. Can I tell you how it went down? I think you'll appreciate it. So one of your fellow listeners, a fellow named Chip. Hey, Chip. He'd asked to purchase a portfolio of rental properties, which we arranged for him. Sweet deal, only about $150,000 investment for 3 properties, and the net yield after all expenses was solidly above 10%. Well, that's what Chip was interested in doing, but something happened in his personal life, and he needed to delay that purchase for a while. Well, that package wasn't going to remain available, and folks, ultimately, it was for my benefit, because I looked at that deal and realized yet again that what I tell you is really true. I don't sell assets I wouldn't buy. So this package of 3 properties, well, my lovely wife Carol and I decided they'd be an excellent addition to our portfolio. And fate has favored that decision so far because the appraisals came in even higher than we expected. Thank you, God. So now we have 3 more properties yielding double-digit net returns, and I couldn't be happier. So onward to the excellent question from Mark, an ophthalmologist right here in the ATL, Atlanta, Georgia. So Mark asks this question. He says, hi, Brian. I really enjoy your show. I'd like to increase my portfolio's exposure to real estate. Have about $250,000 I'd like to invest. I do appreciate your endorsement of turnkey rental properties, and I'm seriously considering that approach, but wouldn't it be much simpler and effective to just purchase a publicly traded REIT rather than buying physical real estate? Thanks again. I'm glad you're back. So, Mark, thanks for a great question. For those of you who may not be aware, a REIT, more precisely a real estate investment trust, is a company that buys cash flow producing real estate, and by law, they have to pass on 90% or more of their net income to their shareholders. It's kind of like a mutual fund that invests only in cash flow producing real estate. There are several REITs that are publicly traded, which means all you have to do is call up your stockbroker to buy them, and voila, suddenly you're generating real estate income without the hassle of buying or owning physical real estate. That sounds pretty enticing, doesn't it? It's a sexy proposition if you're looking for the benefits of real estate ownership. Taking the REIT route is certainly simpler than owning physical real estate, and it doesn't even require one to set up a truly self-directed IRA. The kind of IRAs you can get at Schwab or E-Trade or elsewhere. Those will all work fine for investing in publicly traded REITs. And since you're going to choose one of the publicly traded ones, your principal is quite liquid, so you could convert your investment back to cash very quickly, very easily. But Mark, it's not all roses with REITs. There are 4 big votes against them, in my opinion. First, they can be really volatile. REITs slip in and out of favor on Wall Street really quickly, and that has a direct impact on your share prices, aka your principal investment. The second big vote against them is that REITs don't provide a real hedge against currency fluctuation like direct ownership of real estate. This is a real consideration, folks. Look at what Brexit did to the British pound just a week ago. Currency risk, you know it as inflation or deflation, is a really cruel beast, and direct ownership of real estate helps to hedge your portfolio against it, whereas REIT ownership really doesn't do that. Third, there's very little tax flexibility with REITs. The income is taxed as ordinary income, period. And that's a problem if you're a high-income earner. And you don't get to do tax-free exchanges like the 1031 exchange when investing in REITs, only when investing in physical real estate. And fourth, you're forced to buy at retail when buying REITs. Like if a REIT share is priced at $100, you're going to pay $100, but with real estate, not so much. We routinely buy real estate fully renovated at 60 to 70 cents on the dollar. Yes, it takes some work to find those deals, but there are plenty of them out there. Now, if I could buy REITs at 60 to 70% of their publicly traded price, I'd be really tempted to do it, but it just doesn't work that way. So should you invest in REITs or in physical real estate? I believe you should default to physical real estate unless one of these two things are true about you. First, if your primary overwhelming concern is liquidity, meaning that you need to be able to convert your investment to cash in a matter of hours or days, then a REIT is your best choice. Second, if you're absolutely terrified by the thought of the things that go along with owning real estate, like maintenance costs or legal liability, then you should invest in REITs, but only after you educate yourself about those issues, all of which can be mitigated with proper planning. So then, Mark and SDI Nation, if you have opted towards physical real estate ownership, the question becomes, which property do you purchase? Hey, if you're a full-time real estate investor active in that business, you probably got that covered, but most of you are not. If you're not, if you're an ophthalmologist like Mark, or an engineer, or an entrepreneur, or whatever it is you do, and you want to continue doing that thing while enjoying all of the benefits of real estate ownership, then do this. Stop by sdiradio.com/211 and check out a case study about an excellent but rather common turnkey rental property deal. Remember from before, it's the type of property where you write one check and suddenly you're the owner of a property that's been renovated, rented, and is managed without your involvement. This particular deal is actually available, and it's a great example of what's possible. My friends, have a wonderful weekend, and remember this: invest wisely today and live well forever.